Let's go ahead and get started. I want to go ahead and make some introductions today. We have Cynthia Hemingway on here today. She is Fourlane's CFO. We have Trisha Thomas. She's a partner here at Fourlane, and I'm Lori Walsh leading the webinar today. To get us started, I'm just going to give you a little bit of background into Fourlane. We use our formula for success mainly to drive toward data-driven decisions. We find that the more data that our clients have, the more they want. So that's our goal. We do this many different ways. Some of it may be going through processes. Sometimes it may be a conversion. I'm not going to go through all of them, but we do have quite a few services to help us focus that direction, and we use our drive to get us there. Here are some of our uniques. We are Intuit's #1 value-added reseller since 2010. We are experts in accounting as well as the software. We also have background in ERP. And one of the big things that makes us different is that we are strategic partners for change management. Our focus today is on intercompany transactions. So QuickBooks Enterprise 2023 actually has implemented this, and it is exciting stuff. So we want to make sure we can go through that. Some of our questions today are going to be focused around intercompany as far as when we use them, what it is, just making sure that we understand. Feel free to, if you've got some questions, to put those in our question chat so we can get those answered. So I'm going to go ahead and get us into product and get us started, Cynthia and Trisha. So can one of you kind of tell me what an intercompany transaction is?
Sure, Lori, this is Cynthia. Are you ready, Trisha? Do you want to go?
No, you go ahead.
Okay, I can go ahead and take that. So an intercompany transaction is a transaction that originates in a parent company file. You often see it in management companies that they're managing some individual entities and they're paying a bill for the entity, for instance. So maybe your group health insurance is being paid by one company, but you need to distribute it out to multiple smaller entities. So you're going to have the cash leave company A, and there's going to be a due to from situation between the smaller entities. So maybe the bill's $1,000, $250 goes to each smaller entity. So you would have set up on your chart of accounts a due to from for an intercompany account.
Yeah, and I have one in here I was going to show real quick, and then I used the wrong one.
You have intercompany description is what I just saw.
Ah, okay.
Oh, so to from account and to from parent. There you go.
Awesome.
So on both sides, you would have the due to from account and the entity that you pay the bill out of. You're going to credit cash and debit your portion of the expense to your expense account, and the balance that is going to be due to you from other entities to a due to from account, or a, as Lori has it called here, intercompany from parent or intercompany from subsidiary. And then you open the subsidiary file. Historically, we have to open the subsidiary file manually, and then you're going to go in and key a transaction there to keep the balance sheets in balance. So they also have a to from account, as Lori's showing here. You would pick up your expense on that side, and then the to from account. So it's whenever a parent company pays or takes responsibility for an expense that belongs to another entity. And that you're going to collect the funds back.
Right. Because we need to share the love between the companies.
Mm-hmm.
So one of the advantages to the being able to do this inside of QuickBooks is, so we now have intercompany transactions showing here. It's going to take those transactions and kind of share them between the two. So Trisha, have you had to use intercompany transactions with any of your clients before?
Absolutely. So before 2023 came out, we actually had a lot of clients that, you know, when they had that management entity and it rolled down to their different, for example, franchises, they didn't want to maintain that. You know, it was a very manual process of making sure that, you know, the management company that paid the expense on behalf of one of the, you know, other entities, that it was recorded on both sides. So being able to keep track of that, especially if there's 3 or 4 different entities under the management company, it's very time consuming. So, you know, they would work with Fourlane for Fourlane to handle that. And so seeing this being able to automate and, you know, these workflows in place is so exciting to be able to, you know, continue to support the clients, but, you know, have that automation in place inside of the file.
Right, absolutely. So as far as like, where some of the drawbacks come by not automating it, and then we'll go into product to kind of show the workflow.
Yeah, absolutely. Oh, go ahead.
No, go ahead. What were you going to say?
Oh, I was going to say a lot of times it's just, you know, it's time consuming. It's a very manual process to keep track and, you know, being able to record the expense. And then, you know, like I said, if you're sharing, as you said, sharing that expense along 3 and 4 entities, manually creating, having to open and close files and, you know, keep track of that, as well as not having a true reconciliation process in place to make sure that at the end of the month they all tie back. It's all very manual to keep track of.
Very much. How about you, Cynthia? Have you had some challenges in that area too?
Yeah, so you may have 2 different people working on those different sets of books. You may have your accountant that sits at the parent level who is responsible for their balance sheet accounts and reconciling them every month. And then you might have a junior person or somebody on site at one of the locations that's managing those books. And they just didn't get their reporting shared back and forth to make sure that your balance sheets are staying in balance between the entities. So you could be issuing financials, missing small expenses or a significant amount of expenses because the parent entity picked it up in just a other current asset or other current liability account, and the individual entity did not pick up the corresponding entry to record the expense.
Yeah, and timing on not timing, but the reconciliation between the two was always painful. At least my experience was.
Depending on how many transactions you have running through, it can be very painful.
Exactly. So the intercompany section in product, now this is the parent company, the purple one, the green one is going to be the subsidiary, but it actually has a dashboard in there, so you can actually see when I click on here, like these have already been approved. So I have 2 files connected to this. So it makes the entry in the other side, in the other company, but then you can also reconcile balance sheet accounts in QuickBooks. So you can reconcile the to and from accounts to make sure that each one matches the other company, which I think is awesome.
That's super exciting.
I know. So what about why would the structure of how we're doing the process, why would we need to look at that? Like, why would that matter? Structure of QuickBooks as well as how we're managing the intercompany. Cynthia, do you want to start with that one?
The structure on the types of accounts, is that what we're?
Yeah, on the types of accounts, and then right, that's going to lead into why our workflow is important too, because it's all connected.
Yeah. So historically, when we go to the manual world, if we were using QuickBooks Enterprise, we had the ability and still have the ability to do combined balance sheets. So the product would combine the entity's balance sheets in an Excel spreadsheet for us. And if on one side it's an other current asset and on the other side it's another current liability, you're not going to see those items line up so that you can say, oh, this one cancels this one's tied. Or I have to go take a peek at Joe's garage this week because he didn't tie out to the major entity. So it's easier to see if you use the same account type for the due to from account when you're doing combined financials. But this new tool makes it easy for you to see if your accounts are tying out entirely, which is very exciting.
Yes.
My most recent account type that I settled on for due to froms was credit card type.
That's a good idea.
It gave me the ability to bring the transactions in a copy paste as either a charge transaction or a credit transaction.
I can see that.
Very nice.
Yeah. How about you, Tricia? Do you have anything on like how on the setup that you would want to look at when a client comes to us?
Yeah, I think exactly what Cynthia was saying. Being able to, structuring your chart of accounts in the same manner between those companies allows you to be able to create those combined financials. So you being able to see, if one's out of balance and, they don't match each other. And, that's that quick peek of, maybe we didn't, create the transaction. We created on one side and we, made a mistake and we didn't choose the intercompany, choice when we were creating that bill. So it allows you to really do that quick check. Do the two entities they're due to froms match each other?
Lori, we have a question.
Okay.
It says, if I'm on Enterprise 22 and upgrade to 23, how do I indicate which entity is a parent versus the children? Currently, I have 10 separate entities in QuickBooks Enterprise 22.
That's a great question. So one of the things, at least in my past, and other two speak up, but we always had one that was classified as the parent. So that was the one that was mainly getting, like, all the bills came in, credit cards came in, they owned it per se. And I think that's kind of the key, who is actually responsible for the bulk of them, or who owns it. So Cynthia or Tricia, anything?
Well, I think the question is more aligned to in product. If I'm upgrading my 10 separate entities from 22 to 23, is there a way to say, like, here you have intercompany parent is the primary? Is there a way to identify XYZ company as my primary and the others are subsidiaries?
So once you, go ahead, Lori.
Nope, you go, Tricia.
I was going to say, kind of an easy way is, by renaming the company file, name it your management file. And then when you link each one to that, the main management company file, you've got your different entities linked to it. That's the main thing is, the step once you do the upgrade is you have to link the files together so you can create that relationship between them.
Right. And the key on that linking is it has to be because it is going to require your Intuit login. So you have to have that admin login for the Intuit, and they all have to have the same one. That way you can actually see them. When I go in here to create the relationship, your Intuit account is added. So they all have to have the same email address showing, but the parent company would have, like Tricia said, you could change the name, but it's going to all have all of these accounts in the list, where the subs will more than likely have a shorter list. Anything to add, Cynthia?
No, that's all makes sense to me.
Was that the
so once you identify the primary account, that remains the primary account?
Yes.
Is what I'm hearing. Got it.
Yes. So, and let me bring over that subsidiary account real quick. I'll show you what that looks like on the dashboard. So let me cancel here. So that was the dashboard for the parent company. The subsidiary has a similar dashboard, but like I don't have anything approved or sent here because I haven't sent anything back. I think that's interesting too, how they connect. And so it's easy to kind of, when you're in there, all you're going to see is what's pertaining to each company, except for the parent.
So the parent company can see every transaction, where the workflow is, versus the entities will only see their transaction.
The parent company is going to see the transactions they sent down to the subsidiaries if they've been approved or rejected, whereas on the subsidiary, they're only going to see their transactions in there unless they've sent some out to the parent or to another subsidiary. So each company will see what their activity. It's just that if the parent is doing the majority of the transactions between the company, they're going to have a longer list.
Okay.
So what are some other things structure-wise that we need to look at? Because I think that leads, for that question that we just had, leads into that. What would we want to look at to help streamline their process, do you think?
I think honestly, kind of if they've been before they came to us, if they already had a process in place, we're going to have to look at what their process is. I think one of the key features with 23 and having this intercompany is the workflow for the reconciliations as well as paying the expenses. So that's very important to be able to have that month-end close process. And so when we start working with the client that was doing it manual, we're going to have to take a look at, do we need to do any cleanup? Does it tie out? Because we might need to go backwards and, work with them to make sure that every transaction is in each file before we just introduce this new workflow for how they're handling it moving forward.
Right. What about you, Cynthia?
I would just want to make sure that we're staying in sync from file to file and that our chart of accounts is going to align.
Mm-hmm.
And then if we have an internal process, as Tricia said, to review the process that's existing before starting this automated process.
Yeah. So with anything, it's the foundation, right? We want to make sure that it's set up right. Mm-hmm.
Like you might be doing journal entries now, and this may take you off of journal entries and put you into a form, or you might be using like I said, my favorite new trick was turn them into credit card accounts so that I could use the in-product ability to copy and paste multiple transactions as either credits or charges to keep my accounts in sync.
Mm-hmm.
So we would have to look at that and say, what is this process going to change? I'm pretty sure these are not going to be credit card accounts anymore. If I was the person that was working with Lori or Tricia, they would say, that was a super cool trick. This is not how the automated process works, and then train through the automated process.
Right. Well, and so right now for the intercompany, you can do the intercompany transactions on a bill or a check.
Mm-hmm.
And as you see here, I now have a new button. So I have to identify it as an intercompany before I start. So if I start entering information in here, so this is kind of that workflow, right? If I enter an account here, but I go to hit intercompany, it is going to tell me that I'm not able to do that yet. I have to actually clear it and then do the intercompany. And then it is going to notify me I can add one line at this point in the juncture. I can add one line at a time. But see how it changes? And it gives me the option for any, because again, this is my parent, so it's going to give me that option to choose my company, and it defaults to my account, so it automates these steps somewhat. But like what Cynthia was saying, where she did a batch of transactions, we will do one at a time. But the minute that I hit save here, it's going to send this to my subsidiary company, so then I can approve it. So it's not just an automatic entry. It does have to be approved on the other side. So that's part of that process change.
I think another thing that we had a client that they were, when the child entities were getting the expenses that the parent paid on their behalf, they were creating them as bills. And in this new workflow, that's something we'll have to work with them because it actually creates it as a journal entry.
Correct. Absolutely. When I hit save too, there's another key thing. It's it didn't say, I need to have a vendor. It's just keeping me in line here.
You can't save the transaction, Lori.
So once it saves, this will actually change to pending, and then when it's approved, it'll be marked as approved. So it's easy to see. Now, if it does get rejected from the other side, the transaction does have to be re-entered. So there's some steps in there for us on the process, and understanding that timing, I think, is going to be key, just like you mentioned. Both of you have actually mentioned that before. That being said, how do you think this is going to help some of your clients that have had a struggle with intercompany? Cynthia, do you want to start with that one?
Yeah, so I always like to remove we here at Fourlane, we like to automate as much as possible and remove the human factor of, I'm Susan, I'm going to sit over, Susan's my favorite person in the past month. I'm Susan, I'm going to sit over here and post everything to my due to from account, and I'll send a report over to Jane on the other side and trust that Jane picked everything up the way I put it on the report and appropriately posted it. So in this manner, I'm Susan, I'm taking care of everything in my parent entity. The system is going to send the report to Jane. We don't have to have that human interaction that we're going to pull a report in Excel, attach the report to email, send the report over, and then wait for somebody to respond or have a meeting with somebody. This allows us to have an automated process that's going to send the data to the other file, and then we just have to accept it in the file, sort of like when we decision banking transactions or credit card transactions that we've imported.
Right. So when I come in here and refresh here, it's going to take it just a minute, but it's actually looking to see if I have any transactions that are open, which, whoops, let me just make that larger. So there's my intercompany transaction. I can pick what it's for here. And then I have the option to approve or reject. Now, if we reject it, it does go back. So it's not the same. I mean, it's, pardon?
And it will not be posted in this file.
Absolutely, right. But if I approve this one, and then I go to my journal entries, it'll actually be there, or from this screen, and it just takes it a minute for it to process because it's going between the two companies. I can actually come in here. Oh, okay, as it goes back through, you can actually click on it to view. So if I look at approved, I can actually come here to see my transactions. So it takes me to that journal entry.
I really love this dashboard. This is, so nice to be able to, see kind of, everything that you've got out there. What's pending? What do you need to look at? Like Cynthia said, you're not having to worry about someone remembering to send someone a report through email. You've got this live dashboard that as soon as it's posted, refreshing your dashboard will show you what is pending and what do you need to take a look at.
Right. And the key is a refresh, because if I had not hit refresh when I came back over, I would have still been waiting. So, but yes, I think it's awesome. All right. So what are some ways we can utilize this, right? What our flow is now, or what we anticipate our flow being, to help clients if they don't understand intercompany, for instance. Maybe they've been just kind of, I don't know, just winging it, just kind of making assumptions. How can we use this to help them?
So the definition of intercompany, is that what you're asking?
Yeah, and then how does that?
Doesn't understand.
Yeah.
So, I mean, I'm not working with clients now, but all of you guys are my clients. So when I explain intercompany in the past, in my years of consulting, an intercompany transaction to someone, it's like we have these two related entities, which is the word intercompany, same ownership, maybe partial ownership in the subsidiaries, but we're paying something or we're managing. We have management staff that is in parent entity, and then they're doing things for the subsidiary entity. So if all that management staff is working for entity 1, 2, and 3, providing oversight, direction, things like that, then 100% of the cost of that staff doesn't belong in the single entity, and that you need to allocate or spread the expense to the proper location.
Right, absolutely. That way it's not upside down. Go ahead.
Sometimes it helps them understand, when, they think about their profit and loss and, they're using the class features and they're saying, I want to see my different revenue streams and I want to allocate cost and, have it across the board or across locations, having them kind of look at it this way, that if you have an expense and, like payroll, for example, as Cynthia was saying, and you have they're managing and they're doing the payroll for all of your entities, that expense should roll down to all of the entities, not just be held, one entity take that full expense.
Very good. It looks like we have one more question. The website, the saved videos. So we do have a website on YouTube, or a YouTube channel, Fourlane, that we will post all of our videos there, and you can subscribe to the channel and actually go back and see some of the ones that we've done in prior weeks, along with I believe right now our What's New in 23 is posted out there with Marjorie as well.
It is.
It is. So they're accessible for everyone.
Here, I'll ping out the YouTube channel.
Thank you.
Into chat. I hope you guys didn't hear all that was playing in my ear.
No. So any last words of wisdom or statements of, maybe some things that might help with the intercompany for any of those that are out listening that you may have?
I think, sometimes clients are, worried about changing processes, changing workflows. And I think being able to really work with them and show them the benefits of taking away, the human error piece of it. And, as Cynthia was saying, two different people doing it, and, how do you know that both sides matched each other? This will eliminate that. Being able to free up your staff to focus on other, things instead of this manual, let me check and make sure Susan and Sally did the same entries.
Right.
It gives you that ability to elevate as a finance manager, or the person who's in charge of producing the financials, whatever your title is, to elevate and look at the reconciliation center in each file versus let me go find a work paper that someone did. The work paper is right there in QuickBooks, just like your bank recs are right there in QuickBooks, and all the other balance sheet reconciliations are right there in QuickBooks for you to look at.
Right, absolutely.
And that's the key. We want to have as many work papers that are not inside the accounting file. We want to eliminate those. We don't want to use Excel and depend on the manual tracking of, your accounting data. We want to keep it inside your QuickBooks accounting file.
Yeah, absolutely. Good points. All right, well, we are almost at time. If there's anybody that has a really quick question, if you want to post it out there. Otherwise, we can go ahead. I'd like to just make sure that we don't have any pending questions out there. I think we got them all answered.
No, we got them all answered.
Awesome. Okay. Well, thank you everybody for joining us today. I appreciate the fact that you've taken time to join us. Like we mentioned earlier, we've got all our YouTube, or we've got a YouTube channel for all of our recordings out there, and we will be having Webgility next week as the webinar, so join us for that one. If there's anything that you want to learn, just make sure that you let us know, because we want to add to our collection as we go. Hope everybody has a good day.